So this session is for IF9 Customer Service in Insurance. It's what you need to know. So we will be moving through the presentation very quickly at quite a quick pace. There's a lot of ground to cover, there's 12 chapters, so I will be powering through. Okay. So first of all, let's cast our minds back to IF1. And insurance is a risk transfer mechanism, and customers pay into the common pool and insurers will then pay out any claims. And the handling of these claims and the administration of the policies, these are the most visible customer service activities. So customer service is a combination of marketing, strategic planning, processes, people, research and systems. So ultimately what this means is that companies must get to know their customer, learn what they want to see, and take the steps to ensure that they get it. And they should use their systems that can service their clients appropriately and train and develop their employees accordingly as well. The customer is king is where all legislation and regulation is moving towards. And we've seen that developing over time. So for example, policy wordings have become jargon free. And insurance is a product where we see a lot of customer complaints. And that is because it's a product that it's not tangible. You can't see it or touch it. So we have to really make that easy for customers. There are specific regulations and legislations which all link into customer service. So EU directives and codes of conduct have been established over time in order to protect customers. It offers rights around unfair contracts, for example, and customers are becoming more and more aware of their rights, in fact. So you'll probably know that the FCA is the regulator and they require that the fair treatment of customers is at the heart of everything that we or organisations, do. So the Consumer Rights Act 2015, this is a relevant legislation, and this sets out the law when supplying services that are not subject to legislation. So one key requirement, for example, is that organisations must provide service within a reasonable time, such as paying claims. And then we have the Enterprise Act 2016. So this act put a term into all insurance contracts to say that insurers must pay any money due to the policyholder within a reasonable time. And if they don't, the policyholder can actually pursue for damages. So a quick overview of the insurance market. Like any market, the insurance market is where the buyer and seller come together. Generally, this is done face-to-face, over the phone, or even now we're seeing more of the internet. And it might even be done through a third party, anywhere, anytime. So the buyers are people like you and me. You know, what do we need in the insurance world? And this could also be schools and businesses. We all have insurance needs. We've got the insurers who provide the cover, and we know that we can split those up from IF1 or LM1 into composite or specialist. And they can also be split by ownership, so proprietary, mutual or captives, something else that's covered in the other modules. We've got intermediaries, so this is brokers, and they bring the insurer and the policyholder together. And they mainly work for the client. We have aggregators. I remember this by thinking of them as being aggravating. So those are the price comparison sites, you know, the Meerkats, the opera singers. It can all get quite aggravating, those adverts. We've got reinsurers as well. So reinsurers provide the backing for insurers. And just like we do, insurers also want to spread the risk. So they might have a really large risk where if it was a total loss, it will be quite detrimental to the business. So they might go elsewhere and source insurance for that risk themselves. And then finally, we've got suppliers. So suppliers are services that are provided to the market. So we're thinking of loss adjusting, claims handling, things like that. So we're just going to have a quick look at Lloyds of London. So Lloyds is a marketplace with a society of members. The members form syndicates, and it's the syndicates who carry the risks. Each syndicate employ a managing agent, and the managing agent will appoint an underwriter to accept the risks. Lloyds transact business using a market reform contract, MRC, or a slip, and each underwriter will specify what percentage of the risk they want to take. And once that gets up to 100%, policy is prepared, checked and signed, and this is done centrally for Lloyds by exchanging. So good faith. Good faith is where the insurer and the insured both have a duty to deal honestly and openly. So we're just going to revisit the Insurance Act. So Insurance Act is for non-consumers. So we're looking at commercial clients. And the insured must make a fair presentation of the risk. They must disclose every material circumstance which the insured knows or ought to know. And insurers take a responsibility to ask relevant questions and probe information. And we have the same for consumers as well. So for consumers, we've got CIDRA, which is the Consumer Insurance Disclosure and Representations Act 2012. So this is for consumers, or you might know them as personal lines clients. And consumers must take reasonable care not to make a misrepresentation when answering questions. And we must bear in mind that, consumers are not expected to know what the insurer needs to know. So the rules, as you can see, are less harsh than those for the commercial clients. The insurer should ask really good open questions to ensure that they get all the risk information that they require. There are some facts that do not need to be disclosed. I would urge you to go and look at those in the book. So that's things like facts of law, things that a survey should have revealed. Please familiarise yourself with those, because anything that is listed in the book generally make a really good exam question. So I would look for those. There are also specific remedies that the insurer can impose for each of these acts if the insurer has misrepresented a risk. So first, they would establish if it's deliberate or reckless, if there's been a genuine mistake, and then the insurer can either reduce the amount of a claim paid out or change the terms of the policy, or even for commercial clients, they can just void the policy in its entirety. Again, this is something else that I would really urge you to familiarise yourself with. It's on page 1/16 of the IF9 book, because again, these make really good questions. So go and look those up for sure. So we're just going to look now at some different ways that we can obtain information. The first way that we can obtain information is through a proposal form. Proposal forms are generally quite old school. Sorry, my system is just very slow today, which doesn't help when I'm trying to get through a whole book in an hour. Proposal forms. So the proposal forms used to be the main method of collecting information. And now we really only see these used in commercial insurance, where there's a lot of specific information to capture. We use surveys. So these are usually used for large risks. A risk surveyor will visit the risk and be the eyes and ears of the underwriter and report back their findings. So that would be things like the construction and the condition of the property. We've got supplementary questionnaires. So where an aspect of a risk needs further questioning or examining, a good example of this is with hairdressers' policies. We would generally issue a questionnaire to a hairdresser to ask about any treatments that they might do. So such as dyeing and tinting and chemical treatments, and that information will be on a questionnaire. As we just said in the Lloyd's section, so MRC and SLIPs, market reform contracts, used in the London market to place risks. They have an agreed format and procedure, which is been agreed collectively in the market. A statement of fact, which is used instead of a proposal form for things like car insurance, home insurance, and very straightforward commercial policies. And then finally, we've got client contact, which is probably the most straightforward way of obtaining information. So sometimes brokers or insurers will meet their clients face to face and just ask them questions. Brokers do make client visits on a regular basis to discuss their needs and answer any questions that the client might have. So we've talking about customers. There's two categories of customers. We've got private individuals and commercial customers. A private individual is somebody who buys insurance in a private capacity for their own goods and their own liabilities. So that's people like you and me. And then the commercial customers is somebody who buys insurance in a professional capacity to protect a commercial enterprise. So that's like a shopkeeper or even a global business. So in each of these, customers have their own specific demands and needs, but generally we do all demand and want the same things. We all want clear and accurate information. We want documents that are easy to understand. And the FCA outcome 3 requires that information provided has got to be clear and the customers have got to be kept appropriately informed. We want accessibility. It's easy to speak to somebody, and how annoying is it when you're sort of stuck in an IVR and you can't speak to a human being? We've all been in that position before. So we want to make sure as well that customers can find email addresses really easily and telephone numbers. And the workflows in the business work really well so that when a customer rings, they come through to somebody who can actually solve their problem. Customers want to feel valued, so they can be influenced by the interaction with a staff member. Even letters that they receive as marketing, if we can make those personalised to the customer, it gives a nicer experience. Staff must decide what the positive outcome will be to that client and really aim for that. And ultimately, customers want an easy and straightforward transaction. Once they decide to buy something, they want it to be an easy process. They don't want to be passed around everywhere. They just want it done. So in terms of more specific demands and needs, for private individuals like me and you and our car insurance or home insurance, it is more of an emotional experience. These things that we're insuring, it could be something we've saved up a lot of money for. It could be really sentimental to us. And price consideration is a factor because we're paying for it ourselves. We also might occasionally need support with claims and how to do that. And they want it to be an accessible service. So we want 24-hour claims lines. We want an app where we don't have to mess about. We can just log a claim on our app. And for commercial customers, it can still be an emotional experience. So because a business can also be just a corner shop or a family business, not a massive organization. They still want to understand the products, but we see commercial customers really having an interest in their claims, interest in and their risk management as well. So we'll just move on to another type of customer, which is a vulnerable